All right, good morning, everyone, and welcome to the September edition of the KPMG Social Media Tax Chat. My name is Oluwakemi Gbadebo, and I'm a manager within the Tax Technology and Transformation Unit in KPMG West Africa, and I would also be your host for this session. We would be covering a very crucial topic today, one that every business in Nigeria is keen on understanding, which is staying ahead, invoicing, and input VAT compliance in a changing tax landscape. Now, before I proceed, I would like to introduce our speaker and guest speaker who would be answering our questions on invoicing and VAT today. Now, we have Olufemi Babem, a partner in the tax division within KPMG West Africa and lead in tax technology and transformation, also in KPMG West Africa. Also joining us is the invoicing project manager from the FRS, Mohammed Bawa. As we begin, if you have any questions, please make use of the chat box, or you can also drop your questions in the Q&A box. Now, I can see that we have around 115 participants. To wait for more participants, we have a few questions that we would like you to answer. So if you can click on your answers, there's a poll that would pop up shortly. And if you can answer those questions, we will give you 2 minutes in order for you to answer those questions. Okay, I think I can see the poll. Can everyone see the poll? Okay, I can see that the poll is not up yet. Can you help with that, Omotala?
Yeah, it will be up in a bit.
Okay, so let's just give him 2 minutes. Okay, so I believe the poll should be up now. Can everyone see? Okay, okay. So please select your answers. We'll give everyone a minute. Okay, we see that the votes have started coming in. Please click the link If you are unable to get the poll, please click the link. It's on the chat box. It will direct you to this page where you can select your answers. So we see that from the answers so far, we have a number of people that are aware of the FRS invoicing initiative. And we see that some others are still not aware of this initiative. Okay. We'll give another minute for those who are yet to answer to just select their answers. Okay, we see numerous answers in the chat room. Yes, so seems a majority of our participants are aware of the FRS invoicing initiative. So that's very good. That's very, very good. Okay. So we'll be diving into the session now. As we're all aware, the FRS had announced the invoicing framework last year. And since then, a lot has happened. They have driven the implementation across different businesses, particularly large businesses. So I would call on our guest speaker, Mr. Mohammed. Can you provide us with an overview of the mandate of invoicing in Nigeria and how the journey has been so far? Mr. Mohammed?
All right. Good morning, Kemi. Can you hear me now? Can you confirm? You can hear me?
Yes. Yes.
Okay.
Yes,
Okay.
we can hear
Good
you.
morning. Good morning, Kemi, and everyone that have joined this call. And thank you to KPMG for yet organizing another sensitization campaign to drive the adoption of this e-invoicing in Nigeria. You have been a very good partner to FRS. I would like to thank you. So let me go straight to the question. Okay, regarding the invoicing mandate in FRS. So the invoicing initiative in FRS started sometime last year in 2024 with a pilot phase for large taxpayers, which went live, which commenced in November precisely 2024, targeted at large taxpayers with a turnover threshold of 5 billion naira and above. So the pilot phase was a voluntary phase, which ran for about 6 months and ended in June or July this year. So after the successful pilot run, the FRS now made it mandatory for the same categories of large taxpayers with a turnover threshold of 5 billion naira and above, commencing 1st of August 2025, which means that all large taxpayers within that turnover threshold are expected to onboard, integrate, and transmit their invoices to FRS as at 1st of August 2025. Unfortunately, that go-live date came with a lot of challenges, a lot of complaints due to the short notice and all that. And FRS deemed it fit to give another extension to 1st of November 2025 with the same mandate of achieving onboarding, integration, and transmission of e-invoicing. As we speak today, that deadline has passed, and FRS has come up with a public notice also to acknowledge the efforts made by all large taxpayers to meet up with the deadline, right? And also gave a status report of some numbers that we have successfully onboarded and are currently transmitted. So as we speak now, we have a good number of large taxpayers that have successfully onboarded, have done the integration, and have commenced transmission of live invoice data to the FRS. But we know that we have also acknowledged so many are yet to complete the integration, and that's why management has, in the circular, has also encouraged all those that are yet to complete to, as soon as possible, complete the integration as soon as possible to avoid any, penalties, in line with the tax law. So currently, this is where we are. The mandate For now, it's only mandatory for large taxpayers with a turnover threshold of 5 billion and above. In the next coming of weeks, of course, we are going to do another public notice to roll out the remaining plans that will affect other categories of large taxpayers. But for now, it's only mandatory for large taxpayers within that turnover threshold. And even as at now, we still have other taxpayers outside that threshold that have onboarded and also have done the integration, submitting invoices. So the fact that it's not made mandatory on you, that does not mean that you cannot join. We have so many that have joined, have voluntarily joined, and are fulfilling the mandate. So we encourage all taxpayers, irrespective of turnover threshold, to commence preparation and, if possible, do the integration before it gets to their turn. So as far as the mandate, I think this is what I can say. Thank you very much, Kemi.
All right, thank you so much, Mr. Mohammed. I think that's a very wonderful insight as to where we are on the e-invoicing mandate. Now, on the other hand, we have the introduction of the new tax laws, and within it is an aspect that has to do with the input VAT. As we all know, prior to now, input VAT claims it was more or less like restricted to manufacturing and trading companies. But this new tax laws actually opens the windows to more companies being able to claim their input VAT. So I would bring on my partner, Olufemi Babem, if you can provide an overview of the input VAT compliance in Nigeria.
Thank you very much, Kemi, and good morning to everyone here. Before I talk about the input VAT, I would also make a few comments regarding the e-invoicing agenda of the FRS. I think it's important to mention that it's part of the digital reporting initiative that is being rolled out by tax authorities globally. So it's not a peculiar initiative to Nigeria. But I think is timely. We are one of the leading, tax administrations, to roll this out in Africa. So we must and we should commend and appreciate the FRS for the work. The essence of it really is to improve not just tax administration, but improve the correctness of returns that are filed by taxpayers, improve the timeliness and the efficiency of completing returns. It should make a lot of information available to the tax authorities, and from the taxpayer side, it should provide some kind of mirror check, to be sure that whatever you are doing on your system from your reconciliations ties to what is being reported. So you have a second basis of really comparing and verifying what is being transmitted or what is being posted from a revenue point and from an express point. So it's important to mention that as part of the introduction that Mr. Bauer has talked about. Then to tie that to the VAT service, Section 156 of the Nigerian Tax Act has then expanded the basis or the scope of claim of input VAT to include services and fixed assets. So if you have input VAT that you've suffered on services and input VAT you've suffered on purchase of fixed assets that are used for the production of a new product of a vatable supply, yes. If you have procured services or fixed assets, in the course of providing a vatable service or vatable good, that's to make a vatable supply, that input VAT will now be available for you to claim as that VAT, that you've paid to the vendor will now be available for you to claim as valid input VAT against the output VAT you've collected from your customers. Before the currently and before the NTA in 2026, only manufacturing companies or trading companies were entitled to claim input VAT because it was restricted to goods that were bought and resold, VAT paid on goods that were bought and resold, or VAT paid on raw materials that were used up in the manufacturing process. But with the change in the NTA, And now, even service companies will be entitled to claim input VAT. The scope is now wider. All companies in Nigeria will now be entitled, all companies are liable to pay VAT will now be entitled to use the VAT they are currently expensing on services and fixed assets, to use that to offset their output VAT and then pay over the net liability to the FRS. So that's generally the background to it. And then tied to that is the other provision in the NTA that limits your claim of a deductible expense for CIT to only expenses on which you've paid VAT. So that is also a key consideration for companies going forward, that as you pay your vendors and as you look at transactions with your vendors, you need to ensure that VAT has been charged or you've self-accounted for the VAT on that transaction correctly. There's a definite link between what I've explained now and e-invoicing, because there'll be the invoices from your vendors and the invoices to your customers will be reported via the e-invoice, that's via the MBS platform of the FRS. So it will be easy to track, and it will be easy for them to review and determine whether you're entitled to a claim of input VAT or whether you can take an expense as deductible because of the VAT that should have been paid on them. So that's really the background, Kemi.
Thank you so much, Femi. Okay, so we'll be asking a bit of questions with respect to invoicing and then the VAT, the input VAT that Femi, you have spoken about. Now, I would direct these questions to Mr. Mohammed. So we understand that the go live date was actually 1st of November 2025. Now, can you give us an overview, right, of how the journey has been so far? How many companies have implemented? What are the lessons learned so far? Are there key milestones? Are there other, information that taxpayers should know with respect to their implementation process with this invoicing?
Thank you very much, Kemi, and thank you, Mr. Femi, I think, for that good introduction, linking the invoicing with some of the provisions of the Tax Act. And it's also important for our audience to know that as we speak now, we're already receiving live invoice data, which aligns with what Mr. Femi is trying to say regarding some of those claiming input VAT claims and some of those allowable deductions. They are now visible to us, so which is why we're talking about transparency. So everybody knows, and so when it comes to claiming that, it will not be an issue, right? So it's very important that we understand the objective of this e-invoicing. So for the journey so far, regarding the go live date. So from the beginning, we all know that the invoicing, even though it has been implemented in so many countries, for Nigeria, it's something new that we're trying to do, and we also have our own peculiar challenges. So it's something we needed to approach with a bit of caution, and that's why we designed it in such a way that we needed to do the pilot to actually prove the concept, right? And we gave enough time for companies to join the pilot, right? So that we can work together and actually build a solution that works for everyone. And you can confirm also here that we have had a lot of stakeholder engagements to get stakeholder buy-in, get feedback on how best we can implement this initiative, right? Different stakeholder engagement cutting across different stakeholders, like the tax consultants like you, the different sectors of the large taxpayers, right? Just to do that. So we ensure that is done to ensure that the journey becomes less painful with minimal interruptions to businesses, right? So we're able to do that. And at the end of the pilot, we had just few companies that have volunteered to participate in the pilot, right? But of course, in order to move ahead beyond the pilot, since we have already proven the concept, the only way we can make people join is to make it mandatory. And that's why the FRS had to now make it mandatory with a go live date of 1st of August, because we realize if we don't make it mandatory, taxpayers are not likely to join voluntarily. But actually, the initial intention is actually to encourage the voluntary joining of the scheme so that we go along together like that. But unfortunately, only few large taxpayers took advantage. And don't also forget that the manager of FRS decided to start with the large taxpayers because we have done a survey to actually discover that more than 90% of the large taxpayers already have one form of ERP system or the other, which makes the integration a bit easy, right? Because most of them will not be required to deploy a new system and all that. And that's why we carefully selected to start with the large taxpayers, pilot with them, also commence the journey with them so that we are able to, build this thing together and solve most of the challenges that will come as a result of this implementation, right? So, and that's why we had to make it mandatory. And when we made it mandatory to take effect by 1st of August, that is when we realized so many large taxpayers are now joining, are now asking questions. Those who have failed to attend the stakeholder engagement are now coming with more questions. So most of the challenges experienced early was more like a knowledge gap, not really technical at the beginning. Of course, that's not to say that we've not had some few technical issues, which I'm also going to elaborate here. But majorly at the commencement of the mandatory period for that 1st of August, it was majorly communication gap. So we needed to also do some workshop, a lot of webinar sensitization, to explain to taxpayers, this is how you do the onboarding, this is how you do the integration, And as we are doing that also, we also realized because so many taxpayers are now onboarding to meet up with the deadline, then the challenges of few technical challenges like taxpayers not receiving their activation email because the email they use on our tax promax belonging to some of their personnel have left the company or are not a valid email. And because we needed to ensure the integrity of information, we wanted to rely on the existing information, right? Because we are talking about taxpayer data. So we didn't want to change any information. And that's why we did not give taxpayers the opportunity to change email at the point of onboarding. But then now comes with its own challenges, which will require taxpayers to now go and update the email. Of course, the process of updating will require you to fill a form, get it signed by the relevant authorities within the company before the tax offices will update that because that is critical information belonging to the taxpayer. We couldn't have just, So, of course, that's the process these are some of the challenges that we experienced during the onboarding. And of course, for the integration phase, those that have onboarded mean that they now have to commence their integration. That's another thing because we also realize that most of the people that have the account of the company for the onboarding are finance officers, not really technical people. Most finance people find it difficult to understand some of the technicalities like the API keys, all those things that have been provided in the portal. So then we also have to communicate to those teams to get their technical teams involved. I give them access to the portal so that they understand how this integration will work, right? So at that point, that's when now most companies realize what is required to begin to do this integration. And some of them will have to call on their ERP implementation partners to look at how this implementation will be done. Also we publish the names of the service providers that can intervene. So the integration phase actually came with a lot of challenges because companies needed to study the APIs, study their existing ERP systems, right? Decide on the best approach to do the implementation, right? Decide on who is going to implement it for them. And companies will usually this process usually have to go through some approval processes before finally they can decide on the best approach and who will do the implementation. I think that is the major challenge for most companies. And at that point, that is when FIRS was now receiving a lot of requests for extension because companies now realize that, okay, for them to do all that thing, although for them to go through all that processes, it will be difficult for them to meet up with the 1st of August deadline. So a lot of companies were now writing to FIRS, we need extension to implement this. It's not in our plan for the year. We need to incorporate it into our plan for next year to do that, So we understand all those challenges, and so in response to that, FIRS now thought it necessary to actually extend the deadline to 1st of November, giving another 3 months, which we believe will be sufficient for any committed taxpayer that wants to do the integration. Because what we actually try to do, we did not market this solution in such a way that it benefits only FIRS. We also try to explain to stakeholders the benefits of this invoicing to their own businesses. So what we encourage is don't see it as if you are doing this for FIRS. See it also that you are doing this for your business to improve the operational efficiency of your business, transparency and all that. So, and some companies actually that took it in that direction were able to do the integration within no time, right? As I'm speaking to you now, we have more than 50% of our large taxpayers that have onboarded successfully. Yeah, because we have about 4,000, more than 4,000 active large taxpayers in the country. And currently we have close to 2,000 that have onboarded successfully. And then those that are doing the integration, more than half of those that have onboarded are currently doing the integration or have completed, because the service providers are also giving us feedback. The different service providers that are engaging, that are playing the role of service integration to these taxpayers are actually giving weekly reports to FIRS with different taxpayers that they are working with. So we know the number that are currently integrated. And then we have close to 100 that are transmitting live invoice data. As I'm speaking to you today, we have, just give me a moment, just give you some perspectives to what we're looking at. So, Kemi, if you can hear me, as we speak today, we have over total invoice value about 4-point-something trillion naira has been reported to the portal. And then out of that, about 146 billion of VAT deducted. And what will interest you more is that 97% of these invoices have been paid. Only 2.4% have not been paid. So that explains what Mr. Femi Babin was trying to tell you about how important this is to you. And this, we have all the information of these invoices as we have defined in the invoice schema, both for B2B and for B2C. Total number of invoices generated, number of invoices is over 5,000, right? So that's to show you how this is important to us as FIRS and to also the taxpayer, because it simplifies everything, right? We have all the information that, and that's the focus for the government. Nobody, you can simplify your compliance whenever you want to file. You already know that your VAT has been remitted to the FIRS. If you have input to claim, it's already with FIRS, so you're not going to have any issues claiming that. If you want to claim any deduction, it's there. So it's open to everyone. No auditor will come to you and be requesting you to provide copies of invoices. It also saves you cost of printing all these documents to provide. So the benefits are enormous. I don't have to go through them, right? And start mentioning them. I'm sure by now, most taxpayers and tax code, they already know the importance of this. Somebody was also saying in the chat that Kenya has already, we know that Kenya has been doing this, and they've even extended to their small and medium scale, because I was even reading last week, through even mobile, you can even report your invoice to FIRS as a consumer of the service, and things like that. So this is something we all need to collectively support its implementation, because it has its own benefits to everyone. It's not only to the FIRS, We need to build a system that works for everyone. So the reason why we're having some of the issues we're having today in Nigeria, because the system is not there to make it easier for people, to do. I don't believe that any taxpayer want to just, under declare just for reasons like that. If the FIRS is watching everything, why should I, do that? So as they said, the cost of it's easier to comply. The cost of compliance is cheaper than the cost of non-compliance, right? All these things we're doing is to encourage transparency and ease of compliance, right? So for now, this is how far we've gone. As far as FRS is concerned, the deadline for the compliance has passed for large taxpayers, but FRS is still silent on the enforcement because we know this is something that taxpayers need time, but at the same time, we're also silent about giving further extension because we're reviewing the compliance data we're receiving. We want to see how far, because we know some taxpayers have written to give them more time to finish the integration, and we have the list of those taxpayers. So we want to be able to see in the next few weeks, at least before the end of December, how many of these taxpayers will complete and how many will be transmitting, and then the data will be used for management to make informed decision about the next phase, right? So I can assure you that we know it's a journey, it's not a race. So it's going to take time for everyone. All we want is the cooperation of everyone. FRA is not trying to be punitive about this. We're only trying to encourage voluntary compliance, people to comply as soon as they can. Don't wait until it becomes mandatory on you, and don't be given excuses, because either way you have to do it. The sooner you do it, the better for you. I know taxpayers that have done it and today they are smiling and they are celebrating because nobody is coming to them. We have a taxpayer that did this integration within 2 days. And I was even telling the taxpayer that, please, in one of our engagement, I'll probably call you to come and give a testimony so that people will know that this thing can be done, easily. So if you choose to make it difficult for yourself, that is when it becomes difficult. It's actually easy. The way we have designed the system, it's quite flexible, it's quite simple, the integration and all that. I know we also have to improve about our communication, support channels and all that, which we are also doing. The invoicing portal is knowledge-based, robust enough that almost every information, if you go to the developers community today and type any keyword, it will display all the questions that have been asked before with their answers. And then if the answer is not there, you can actually ask a new one and then people will respond to you. We have an engagement portal that you can schedule an engagement with us with an allocated time of 30 minutes for us to answer some of your questions. So I can go on. Let me just stop here, Kemi, and maybe in the next question we can talk about this more again. Thank you very much.
Thank you so much, Mr. Mohammed. Wow, it seems that the invoicing is really taking off and it's taking off fast. So we see that there are also a number of learning curves here with respect to implementation. So I would like to ask Femi, from your own experience, what were the challenges that you have faced with respect to implementing this for our clients here at KPMG?
Thank you, Kemi, for the question. And I think I'm excited when I hear Mr. Mohammed talk a lot about data, right? And the way he's rolling out the numbers, the fact that the FRS at the tip of the finger, can tell you these are the number of large taxpayers we have. These are the numbers that have connected. These are the ones it tells you a lot about the power that invoicing is going to make available to the FRS. Data is going to be extremely key as they look at improving the compliance going forward and changing some of the things that we see from a filing perspective and an assessment point. He's talked a lot about how taxpayers are responding, and I do agree. We've seen an increase in the uptake by taxpayers, a lot more interest in connecting to the FRS's portal. Some of taxpayers is out of compulsion. I mean, they're saying, well, if not because there's a law there, right? But for many, there's a willingness to voluntarily comply, and that I think is a good sign as far as this is concerned. Definitely, there are teething issues that we have taxpayers that have faced. There are some that have complained in terms of the way the mappings are to be done, and I think some of it will be discussed with the FRSA as well. You know, what kind of data are we transmitting? How do we map? You hear like banks, for example, will say to you, we don't issue invoices. So what kind of data is the FRS asking us to transmit? In what format are we transmitting them? Can it be real time? You know, and if you ask the question, does the FRS have the capacity to, accommodate real time transmission of that kind of data? You have taxpayers who, for the first time, are also thinking of investing in a proper software ERP or a proper accounting package, so that they can at least at some point, be able to connect to the FRS's digital portal as well. So, in terms of helping taxpayers, is also helping to transform the way some of the companies do their business currently by adopting technology to get it done. So, typical challenges or common challenges we see is, queries around what type of data should be transmitted. How do we deal with the non-resident companies that we transact with? Now it looks like the focus is more on sales. How do we then do? How are we going to manage the transmission for purchases from vendors? Seeing that many of the vendors, in some cases, will not be within the large taxpayers bracket currently. And there are other practical connectivity issues, which we've had cause to go back to the FRS. FRS has really been supportive, because when we have those questions and we go to them, we get the guidance. And I think Mr. Mohammed has talked about many of the communities that are existing where some of these things are then discussed. So those are some of the integration challenges that we've seen, and in many instances we've resolved them with the FRS. For others, we've leveraged our global knowledge based on, like I said earlier, this has been rolled out in many countries in Europe, Latin America, and so we leverage on our on colleagues in countries where these have been rolled out, take from their knowledge and use that to enhance, how we then provide services and support to our clients. Kemi.
Thank you so much, Femi, for that. So based on what you have said so far, and not just you, but even Mr. Mohammed, you had mentioned data and how data is key. Now, it's very, very important for companies to transmit the right information or the right data so that there are no issues down the line. Now, from experience, I had noticed that one of the, let's say, major issue that companies have is with respect to the HS or IC code mapping. In the e-invoice schema, there's an aspect where you have to map each of your transactions to a HS code. So I would like, Mr. Mohammed, if you can provide what is the relevance of this within the schema. And for instance, like a taxpayer may not know how to properly classify their transaction, maybe due to the ambiguity of that particular transaction. For example, what we have seen in banks, right? So what exactly is the relevance of this code? And can companies use just one code for all their transactions?
Okay, you said what is the relevance of this code? Standardization, of course. We're trying to align with global best practice, and we're trying to make our invoices interoperable with everyone. So we don't want to do anything in isolation of what others are doing. The HS code is harmonized. So what you need to know with the ISIC code, this is not the first time we're using the ISIC code classification in FIRS. Even when you register on your tax forms, the classification that we're using is based on ISIC classification to classify the category, the sector you belong to, and then the subsector, which has to do with your business line. You do all that on the tax form acts. But the sub-classification, what I think the confusion people have, it's when you select the subclass, that does not mean that is the only thing the company is engaged in. That might be the primary thing you're doing. You can only select, but you can also be doing others. That does not mean that you cannot do others. If, for example, in wholesale and I decide to maybe, choose a category, maybe, so you can do. So one thing you need to know is that the ISIC classification is to classify what the company is into. First of all, which sector? Are you in agriculture? Are you into mining? Are you into this? And then the sub-classification it goes further to say, okay, what specific thing are you into under agriculture? Are you under wholesale? Are you doing retail? Are you doing, right? Stuff like that. That has been existing even before now, right? So what we actually did at the initial of the onboarding is to give taxpayers the chance to do the selection again, which was now throwing up a lot of issues, confusion, right? Meanwhile, we have already been categorized even in tax remarks. And that's why we quickly had to, even though it took time to even do the integration with tax remarks so that you can even onboard from tax remarks so that those information becomes auto-populated. It's no more asking you again, what is your own sector? We already have that information. So ISIC code you need to understand is at that level that you do that. The HS code is for VAT, basically. It's for VAT. That's why it simplifies everything. What is categorize all your transactions based on either vatable, non-vatable, zero rated, what's the other one? So that's what the HS code do. So if you look at it, the ISIC is during the onboarding to know what are you into and all that, which is already captured on tax remarks. The HS code is when you want to generate an invoice. It's the same thing. Even when you are reporting VAT today, a manual system in FRS, because it's still manual, because the Excel sheet will tell you, okay, which one is vatable, which one is not vatable, which one is zero rated. You do that manually yourself. But the HS code does that for you automatically. Once you select the HS code for the type of goods or services you are trying to raise the invoice with, automatically the system knows that this is vatable, this is zero rated, this is that. That's what the HS code does, right? And that HS code cannot be, it's already harmonized, right? Even when you're doing, that's what custom uses, even at the point of import and export. There's no any manual thing to say this is what I'm doing is vatable or not vatable. You just select the HS code and automatically it categorizes that particular goods or services that you're trying to raise an invoice and then determine whether it is vatable or not vatable. So I don't know where the confusion is coming from. Right, you just have to find the relevant HS code relating to the particular goods or services you are trying to sell or buy. You just have to find the relevant HS code. And I think the APIs have been provided for all the HS code. It's not something that FIS has manufactured. It's globally standard. Do you understand? So HS code is for VAT. Just put it like that. It's for VAT because that is it. Any other tax outside VAT cannot be determined at that point. That one will be at the point of filing, your CIT and that. So just understand it that way. If you understand, I think it simplifies it for you. Try and encourage taxpayers to always find the relevant HS code relating to what they are selling or buying so that it can be correctly classified. It exists. There is no one will come and tell you that, no, what I'm selling is not. There has to be something close to what you're doing, right? So I think that is also another confusion. Some will come and say, I'm into export, import. Before you're doing export, import, what is your main category? There is export and import. There is HS codes for export, which also will determine whether what you're exporting is vatable or not vatable and things like that. So there's nothing like business classification as I'm into export, import. No, you must be doing something before you are trying to import. Are you manufacturing? Are you into, and things like that is the primary, the exit. But some people would say I'm into export and import. Am I supposed to join the e-invoicing? That's not, and remember we have said from the beginning, irrespective of what you're doing, whether it's taxable or not taxable, government wants to know that that transaction is happening. So no one is exempted. Don't say I'm under the free trade zone, so I've been exempted. No, no, no. You still have obligation to report what you're doing to the FIRS, right? So we need to get that clarity about this HS code and ISIC. First of all, the HS code is just our tax, VAT, and it comes when the invoice is being raised with the relevant HS code, so that automatically it applies the relevant VAT, right? ISIC is to classify your company on the FIRS. So now don't even bother about that. The information, if you're on Tax Pro Max, just go and enable yourself from Tax Pro Max, right? Unless if you want to change your classification that you did on Tax Pro Max, which one now you now have to probably go to the tax office to change it. So we are no longer asking people now during onboarding, what is your own classification, what is subdivision, if you're onboarding from Tax Pro Max actually, right? But if you're onboarding from the MBS portal, you will have to provide those, even though we're also trying to automate that process so that even if you are doing from the MBS, automatically the information appears to that. So I don't know if I've been able to provide a bit of clarification on that. Thank you.
Oh, yes, you have. Thank you so much, Mr. Mohammed. So based on what you said, let me just try and re-clarify, right? So the first thing is that it's very important for companies to select the right ISIC or HS code when sending their invoices, right?
You are
Or
not
when
selecting
registering.
ISIC when during onboarding and registration that you
Okay.
select your ISIC classification,
I
which
select
does
ISIC.
right?
Okay.
Yes, but it's when raising invoice that HS code now comes in,
You select.
right?
Okay.
By
Okay.
selecting the relevant HS code for the type of goods or services you are trying to buy or sell, right? That is when the HS code now comes in, right? So you look at it and see which one closely describe what you're trying to do. And once you select it, the applicable VAT is applied. And then there is nothing. So you are not expected to say, oh, so what people would like to define what they are trying to do themselves by writing it and say, no, this is what I'm into, and it's vatable or it's not vatable. No, you don't do that. You don't do that. Whatever you are selling or buying, the HS code exists on that. You might not find something exactly like it. The same thing with the ISIC, but you can find something closely to what you're doing. And when you put it, it's automatically the VAT rate is applied. So it's for standardization. That's just basically it. And that's why it continues be updated based on what every other country has on the different version of it. So that is it. Thank you.
Okay, thank you so much, Mr. Mohammed. Okay, so we have another question from the audience, right? And according to them, they have reviewed the HS codes, but they are unable to see services under the HS codes that is provided by the FRS. So what do you say to this? Is this something that is there? Is this something that we need to review? Or how are they able to implement this?
They said they cannot see services under the HS code?
Yeah, so the HS code, the list of HS codes just shows goods, a number of goods, but they are unable to see services under the HS codes.
No, we have services. So what I will do is before the end of this session, I will get you something on that so that maybe they are not doing the right thing.
Okay.
Let me just talk to my technical team and see. This should be peculiar to some because we've done this with so many taxpayers that are owned to service sector. Right, but I will find the right answer for you before the end of the session. So no problem. You said they are unable to see, so they are only seeing goods.
Yes.
All right.
Yes.
I'll get back. I'll get back with the right answer on that, so we can proceed.
Thank you so much, Mr. Mohammed. Okay, so we are going to move a little bit to the input VAT. We've spoken a lot about e-invoicing. So I would like to ask, Femi, why is this new change to the input VAT claim and VAT on deductible expenses important to taxpayers?
Okay, so for many years, we've argued that the way the local Nigerian VAT is structured, it operates more like a sales tax, where especially for companies that are not in manufacturing or trading, i.e., you have your output VAT, you pay that to the FRS, so you collect the VAT and you pay, which is how a sales tax typically operates. The mechanism of VAT by nature requires you to offset your input and output. So this change by the FRS really reflects the nature of how input VAT mechanism works. And why is it important for taxpayers is it will have significant impact on your cash tax flows, right? It will enable you do more of cash planning and forecasting now if you correctly understand what VAT you've suffered and what input VAT you can then use to offset the output VAT that you've collected. Currently you pay VAT to vendors and you collect VAT from your customers and remit the full VAT from your customers, but are not able to net off. So now that you can do the net off for service companies, for example, if I look at the telcos or any of the other big service companies, there's significant opportunities now for you to manage your cash flow better. So as tax leaders, heads of tax, your work now would include, working with your treasury teams to be able to forecast properly, how tax cash should be managed on a month-on-month basis, especially from a VAT point of view. That's a very important role for heads of tax going forward. And so that would help manage how you then interact with your vendors as well. Because now that you know that the input VAT, and if you then imagine what Mr. Mohammed has said, now FRS has visibility on all your transactions. So you would have to be careful about vendors that you provide or that provide services or goods to you and don't include VAT on those transactions. So as companies, you need to introduce controls that would manage and that will monitor and manage how to validate, first, that your vendor transactions carry VAT, except it is exempted. So if it's an exempt goods or service, there's no VAT. But if it is not, then you should be paying the VAT on that service. And so if the vendor hasn't charged you VAT, you need to either self-account or insist that the vendor includes that VAT such that it is properly captured. The VAT you can then offset against your output VAT, depending on the nature of the service. So importantly, companies will have to set up tax controls. We have to introduce more controls around how they validate expenses, how they'll even onboard the vendors, depending on the nature of the transaction. Then controls around how they validate the transactions that are being paid, vendor transactions, controls around how the input VAT, or the VAT paid to those vendors are not expensed, are properly classified for the qualifying transactions, that VAT is properly qualified as an input VAT asset and not as an expense. So all of those controls will have to be introduced now with the new legislation. And again, like I said, and that would help, from the first point, to manage the deductibility of expenses, to track what input VAT you're entitled to, and to decide what actions you need to take, right? But that's why right now taxpayers need to proactively plan and ensure that they can take full advantage of these new provisions.
Thank you so very much, Femi, for that. So I would also like to ask a follow-up question. Now, would all vendor expenses or purchases qualify as input VAT claim?
It's important to make that distinction. So the way the law is couched now, it talks about VAT incurred on on vatable supplies, including, that means it extends this from goods, raw materials, extends this to services, and extends this to fixed assets that are purchased. But the qualifying phrase there is that it must be used up or directly related, or sorry, it must be used up or consumed in the provision of a vatable supply. So it means that it's not all your expenses, whether purchase of goods or services or fixed assets, that will be that you can claim the input VAT on, right? It talks about it must be, there must be a direct link between that expenditure and the sale that is being made. And that's why I talked about controls earlier. So you have to have a process and have a check, where you identify what are your supplies, what goods, services, and fixed assets are directly used up or consumed or applied for the sale of that product or sale of the service. Those are the only ones that can qualify for import, that should qualify for input VAT claim. So that's an extra layer of review and control that has to be put in place by taxpayers. Otherwise, you run the risk of claiming much more than you are entitled to claim, which can then create a problem for you during an audit. It is important, and I think I can mention it at this stage, that there are time limitations in regards to the claim of this input VAT. So if you have so much input VAT now that you can't utilize them fully, you can carry them forward and use in the subsequent month. But if you can't, then you have within a 12-month period to demand for a VAT refund from the tax authorities in cases where your input VAT exceeds your output VAT. So 12 months from the month in which the credit or the excess input VAT arises. And you have a period of 5 years within which you must fully use up the input VAT excess that you then have. So there's also a bit of strategic planning that will be required to know, when do you need to apply for a refund, and what do you need to do to manage your input VAT claim as well. If you then ask for a refund and the FRS should pay you the money within 30 days, as the law has said, and they conduct an audit and find out that you've overclaimed or overstated what your input VAT claim is, I think the penalty is about 200% of the amount that has been claimed or has been paid back to you. So it's extremely important for taxpayers to put an eagle focus on this, so that you are not exposing yourself and the company to unnecessary penalties and liabilities that could have been avoided by doing the right thing.
Thank you so much for that, Femi. We'll be going on a break shortly. But before we go on a break, just one more question, right? So what if the vendor does not include VAT on its invoice to taxpayers? What are the implications of that?
So it's important that, and I talked about the tax deductibility bit. If a transaction is liable to VAT and you do not account for VAT on that transaction, what the law has stipulated is that that expense will not qualify as a tax deductible cost for the company, which means when you are preparing your tax returns, any expense on which you are taking a deduction but no VAT was paid, any qualifying expense that you have taken a deduction for but no VAT was paid, will be disallowed by the FRS. And with invoicing, like I said earlier, it's easy to verify. They have the invoices they can also check. And so what that means is, for you as a company, you need to start from the beginning. Once you get an invoice, or you are engaging with your vendor, or you are onboarding a new vendor, understand the nature of the transaction, determine whether it is VATable or not. If it is VAT exempt, then you understand that the vendor is not expected to include VAT on its invoice. So that categorization is done. But if it's VATable, you determine if it's zero rated or at the standard rate, and ensure that in onboarding the vendor, those codings, or the coding, is done properly. Now, when you then receive an invoice from the vendor, and you can validate immediately, is this an exempt service? If the answer is no, then immediately you are asking yourself, why is there no VAT on this invoice? If it's not zero rated, then you do one of two things. You go back to the vendor and insist that the vendor, if it's a qualifying vendor, remember that small companies are not also expected to register and include VAT on their invoices, but you as a beneficiary of the service should self-account, right? So at the point of onboarding your vendors, all of this has to be done. First, classify the vendor, whether it's a small company or a medium or large company. Then classify the service that the vendor or good that the vendor is providing to you. Is it exempt or is it not? All of this has to be done at the onboarding and properly coded into your system, such that the ERP recognizes that once an invoice is coming from this vendor, where I expect VAT to be on that invoice. If there is no VAT, then it flags it as a vendor that should be queried. And when you query, you can then insist. So one of two things, you insist that the vendor should include VAT on that invoice, or you self-account for it by yourself, especially if it's a non-resident vendor. So it's a very important step and very important question that you have asked. And it starts from, clients or taxpayers have to go back to their ERPs, look at how their master data for their vendors have been set up for existing vendors, and ensure that you set them up properly, classify the vendors, classify the service, and then for new vendors, as you're onboarding them into your ERP, ensure that those classifications are then done. And then you then go, after you've cleaned up the master data, then go to the actual transaction processing itself. And so where there are exceptions, like I've said, the two options is insist that the vendor includes VAT, register and includes VAT on their invoice, or you self-account for it by yourself.
Oh, that's great. Thank you so much, Femi. All right, we have numerous questions in the Q&A box, and I can also see some of them in the chat box. But we will be going for a 5-minute break right now. And once we come back, we will see how best we can tackle these questions. Thank you so much, everyone. 5 minutes, and we're back.
There is a popular African proverb that wisely states, "Until the lions have their own historians, the history of the hunt will always glorify the hunter." And there is no better way to demonstrate this than using the following. These are snips from newspapers and other broadcast media around one of the foremost communications companies in Nigeria. And they tell a negative story. In the next screen, you can see a very positive narrative from the same company. It is noteworthy that these screens are only a month apart, with some of the negative reports in March 2022 and the positive reports in April 2022. What changed in just 1 month? Another intriguing story comes from a widely circulated social media image. It led to various interpretations, turning everyone into a tax expert. People were puzzled by how one entity managed to pay more taxes in 1 year than all the banks in Nigeria combined. The real question is whether this is the true picture. How does it impact the public's perception of these entities? What story is conveyed when such information becomes public? Equally important is understanding who is crafting the story and communicating these narratives. This is why we always say that at the end of the matter is that the story is told right all the time. It underscores the need for taking responsibility in communicating your tax affairs and matters, ensuring that your story is always communicated accurately. Tax impact and transparency reporting provides the avenue through which you take personal responsibility for how your tax affairs are communicated to the public and that your story is told right every time.
All right. I think our 5 minutes is up. Welcome back from the short break. So we'll be diving into the questions that are in the Q&A. Can Femi and Mohammed confirm if they're back?
Yes, I'm back. Em.
All right. All right. Okay. So we're going to be starting with the first question. This is on invoicing. Now, Mr. Mohammed, will the invoicing exclude taxpayers from monthly filing?
Monthly filing of VAT, right?
Of VAT, all right.
Yeah, that's the long-term objective. That's the long-term objective.
Okay.
Exactly. But you know, we have to ensure that majority of the taxpayers are compliant first, especially because of impute VAT claims, right? So if you now said they can do that and then some of their suppliers are not reporting their invoices, it's going to affect the seamless claims of impute VAT. So we need to be sure as FRS that everyone, not everyone, you can't get 100% compliance. You need to get at least a minimum number to be compliant. And then you now make it mandatory so that anyone that does not join it has its own, apply the penalties, right? And then you now make the mandatory filing of VAT automated, right? So in that way, every merchant will ensure that his supplier is onboarded because he knows that if I sell goods to this and my VAT is not reported, I'm not going to be able to do that claim. But if you do it now, you're going to interrupt a lot of business dealings, right? So at the appropriate time, FRS will make that announcement. But the long-term objective is actually to simplify VAT filing. Thank you.
Yeah, thanks. Kemi, let me add to what Mr. Mohammed has said. So it's a correct statement, but so that the audience, are very clear, you would not be required. So the way, and we're speaking from experience, from our colleagues in regions where this has been fully implemented. You move from self-filing of your VAT returns to the reconciliation phase. So what should happen when invoicing is full-fledged is the FRS will pre-fill your VAT returns. So which means from the data they've captured, they will simply, your value of your transactions, value of your input VAT claimable, all of that would have been pre-filled. And so when the filing due date or before the filing due date, you have the option of going to your portal on Tax Pro Max and validating, agreeing with what the FRS has captured on your behalf. Or sorry, not on your behalf, but captured from all your data. And so where your work would then lie as tax leaders is to sit down and reconcile what has been captured to what your own records or systems are actually throwing up. So while at that time you'll not be required to file the returns anymore in the current form, but you will be required to maintain, or you'll be expected to maintain your own in-house records and your in-house VAT filing, basically, more like a shadow VAT filing, such that when that time comes, you can quickly reconcile what the FRS has to what you have and explain where the variances exist. It may be that you have issued a debit note internally that hasn't been captured. So those things have to be done at that reconciliation stage. And that's the phase we will move into once this is fully operational.
Thank you very much, Femi. So another person wants to know, and maybe they want to be very clear with this. So this is for you, Mr. Mohammed. Can you confirm if there are penalties for companies that are still in the integration process and not finished as of November 1st, 2025?
So I cannot confirm what FRS has not said, so you need to understand that. So that's why we are quick to bring out that public notice, and which was, I think, very explicit. I think I shared it with Kemi. Someone was asking on the chat. So please share with them, right? What I can tell you now is that we're still silent on the penalties, but it's important for people to know what the penalties are. Very, very important. Know what the penalties are, and then when they will take effect, because we have penalties both in the existing law and then in the law that is also taking effect in January. So when you know the penalties, the likely consequences for not complying, and then based on several public notice that FRS has done, then you'll be able to guide yourself on what you need to do. What I encourage people is what I know is that before FRS will penalize, they will make it public. This one I can guarantee you. Before FRS will talk about penalties, they will make it public. We'll make it public that starting so day, if you have not done this, penalties will apply. This one I know it will be done. And for now, FRS has not said that. What we're saying is, please fast track your implementation. This is the due date. This is it. And I have explained the importance of you to voluntarily do this thing without waiting until we say we are going to start penalizing. Please, we shouldn't do that as a country. That's what we're trying to propagate. That's what we're trying to encourage. That's what we're trying to support. Right? So stop asking questions. I don't even like people asking questions about penalty, because that's not what we're saying. If FRS had wanted from day one, when we said this is the go live, they will have simply said, okay, if you don't do this by this day, we're going to start penalizing. Right? So since FRS is not talking about penalties, please, I encourage you also, don't talk about penalties. What you should be more concerned with is, how do I comply as a business? How soon is going to take me to comply? If you know it's going to take you a very long time to comply based on your probably current processes or this, and then notify FRS. Please, I'm not able to do this because of this. You have notified. If you receive a reply, fine and good. If you do not receive a reply, you have communicated, and go ahead to do what you need to do. So focus on what you need to do, not talking about penalties, please. Thank you, Ken.
And I just to add also to Mr. Mohammed's question, he said a lot without saying a lot, right? So I like the way he's actually presented it. But you see, I wanted to add, and I like the last part of his statement. I was going to say, when he was speaking, what was coming to my mind was the popular song by Fela that says, trouble sleep, Yanga go wake them up. FRS has been they've technically been silent, right? And so we shouldn't be poking the eye of the tiger to say, what exactly is this that you're doing? I think what FRS has done technically is giving us the opportunity to comply. And rather than focus on what the penalties are, I would encourage taxpayers to focus on compliance more, right? Let's put in all the effort. Let's be compliant by at least 1st of January 2026 at the latest, right? What FRS wants to see is everybody onboarded, and we want to support them in that direction. So the same way he also doesn't like hearing those questions when clients ask me, I always say, you know what, just focus on getting compliant first. Let's get it done. And then if a penalty comes, we can then go back and say, bros, please don't be annoyed. We were in the process. And he also did make a valid point. For KPMG clients, we'd also then encourage them to write. So when it was close to November 1st, we encouraged all our clients that hadn't complied to write to their FRS asking for more time. So those are ways you can manage it in the meantime. But please, let's focus more on compliance rather than on getting compliant, rather than bothering ourselves with, whether FRS will penalize us now. That fear can actually paralyze you more.
And it's
So
also
Thank you.
very important. Thank you very much, Femi. It's also very important for us to focus on the integration process so that we do not rush the process and make mistakes. And maybe at the end of the day, we have to go back to do maybe certain corrections. So thank you so much, Femi and Mr. Mohammed. All right, Femi, you have a question here. So someone is asking, how are we able to account for impute VAT on over-the-counter transactions / cash-based transactions?
Okay, so remember that to step back, you need to first understand that the VAT Act itself doesn't typically exempt companies, right, from VAT. It exempts transactions. What they've done with the law is to then exempt small companies from registering and charging VAT, but does not necessarily exempt their consumption, or sorry, what they provide to you or provides as goods and services to be exempted. Now, the question is a bit tricky because, like we know, over-the-counter purchases are purchases where you go somewhere, they're usually one-off. You go somewhere, you pay and you get a receipt rather than an invoice. So you don't have a contract. Usually it should not be for large transactions. It should be for small items you want to purchase very quickly and all of those. I think the way I would technically answer is to then understand what is the nature of what is being sold. Unlike withholding tax, VAT doesn't, which was I started with, the exemptions is not by, so you don't say, oh, is an over-the-counter transaction. There are some specific exemptions under the modification for things like the airline tickets, direct purchases, and all. So you need to start from what I'm buying. Is it exempted under the and the modification order has been from the NTA will no longer exist, right? So hopefully the FRS may issue another clarification in that regard. But if it's not exempted, what you're buying, whether it's over the counter or not, if it's not exempted, then you need to understand that as a company that is making that purchase, you may need to self-account for the VAT on it. The guy who is selling, so if you go to a small shop, a mom and pop shop or a talk shop, and you buy small items, if that seller is a small company, then that individual is not required to even register and charge you VAT. So that is clear. But you as the buyer, as long as what you are buying, whether a good or a service, is not exempted, then you have an obligation to self-account for the VAT on it. So that's the way I think I would respond to it.
Thank you very much, Femi. So another person is asking, how will banks claim impute VAT? And maybe this ties to another question that I can see with respect to the pharma space, where there are many transactions, and so the impute VAT would also lead to VAT credit / refund. And how exactly does the FRS intend to manage the payment of this? Maybe Mr. Mohammed will answer that second part of the question, or maybe you can answer the first part, which is how will banks claim impute VAT?
So for banks and for all companies, I think the process is the same. It's straightforward. What you need to first do is identify which of your supplies are vatable, because remember, it's only applicable on vatable supplies. So once you've established which of your supplies as a bank is vatable, which ones you charge VAT on. I know things like your interest income is not, for banks, will not be vatable. So any service or fixed asset or anything you procure that is related to loans and stuff may be difficult, right? So first is let's establish which of your products are vatable, which of your items sold to customers are vatable. Once we've done that, then we would then do the detailed analysis of which expenses can we tie as directly related to the provision of that service or that good that customers then purchase and pay VAT on. So that's the level of analysis that you need to do. But it's possible now that you're a service company, revenues on which you charge VAT and you currently pay that VAT over to the FRS without a deduction. You can now do the analysis of what input VAT you can use to offset that output VAT you've collected from your customers and pay over the net. It's quite a detailed work. It's straightforward, it's detailed, and may need some support to get it done. But that is the way I would respond to that and allow Mr. Mohammed to respond to the second issue.
All right, thank you very much, Femi. Okay, so Mr. Mohammed, someone is asking, in the pharma space where sale of drugs are zero rated, there will be so much input VAT, which automatically leads to VAT credit or a VAT refund. Now, how does FRS intend to manage this payment of VAT refunds within 30 days?
Yeah, that's the starting point. The invoicing is the starting point. Most refund process take time because of lack of information and data. FRS needs to verify all these claims, and so if we're able to implement the invoicing and this data comes seamlessly, it can be verified, then the refund process becomes easier. So, and it's automatic. So that's a long term. That's why you see all these things are interconnected, and that's why we need to get this right. Most of the issues taxpayers are having today, withholding claims, VAT claims, refund issues, is because of data validation. That's it, right? And that's why we believe this is the most important period for FRS after the implementation of after the takeover of the tax roadmaps. If we're able to get this thing right, transit seamlessly, I'm telling you, our taxpayers will be the happiest people on earth, right? So that is it. It's just the beginning. We need to get this right before we can now think about automated refund process and all that, right? Even most of the refund that results in audit is because of lack of data. I'm telling you. So let's just get this thing right, and then I can assure you that refund will not be an issue. It will just fuse into this seamlessly. So that's the assurance I can give. As soon as we get this thing right, refund issues will be dealt with. Withholding issues, VAT claim, all these things will go. Thank you, Kevin.
Thank you very much.
Just to add to what Mr. Mohammed has said, to add to what he said, again, because the law specifies that the refunds must be made within 30 days of your application. What he has said is exactly that. Your data must be available for them to verify. Though there's not an audit that is required before the refund is done, but at the minimum, FRS should be able to see the basis for which you are asking for the refund. So that is important. Get your vendors to onboard as well if you can. And if they can, then make sure that your data is available to substantiate your claim. But I think the comment I would like to add to what he said, for companies in the pharma space, you also need to remember that if your sale, and it's a general principle that we all need to remember, if the item that you're selling is zero rated or exempt, it's very possible that your item that you're purchasing to resell or the raw materials you are purchasing may also qualify as exempted. So, or qualify as zero rated as well. So we need to be careful that, as you are claiming the input VAT is limited to items that ordinarily should be vatable and can be shown to have been directly used in the production of the item or used in the marketing and sale of it. So that's important. Don't claim input VAT on all your expenses and say, this is what I'm entitled to. We need to do that level of analysis. What is the nature of this expense? Is it vatable? Is it exempt? Is it zero rated? How is it related to what I've sold? That stretch has to be made. Otherwise, you may run into trouble when after FRS has paid you, they then audit you and find out that you've overclaimed, then you pay 200% of what it is that you've claimed.
Thank you so much, Femi. Okay, so I'm looking at a particular question, and maybe Femi, you can answer this. And the person says that they're in the agency industry, and so they're asking, can we take input VAT from purchase of fixed assets or any other service or any other services vendor are not directly associated with services revenue billing? Okay, maybe the person will need to restructure this, but I think this is something worth answering. But do you get the idea, Femi, of this question?
I think so. I think so. And I think the last response that I gave should also address it.
Should
You
address
can
that.
only claim input VAT, yes, on expenses that are directly related to your output VAT. So, and that's the easiest way to look at it. So if you're an agency and you have an agent principal relationship, you would earn commissions or fees or whatever it is, then it has to be services you've procured in providing that agency service to your principal, or fixed asset that you've used for provision. So if I wear the hat of a simple clearing agent, and part of my agency would, and that's the only business that I do, I probably have my motor vehicle that I use for my, not personal motor vehicle now, motor vehicle that I use for my business, and I have to drive to the port every day to the port to ensure that my clients' goods are cleared and all of that, and then I get paid a commission. Those are examples of assets and services and goods I can directly tie to the provision of that commission. So it's the same answer. You need to first start from what service am I paying VAT on, and then tie it back to which supplies are directly related to that service. And that's what you can claim input VAT on.
Thank you very much, Femi. Mr. Mohammed, someone is asking, does a free trade zone company need to onboard on Invoicing?
Yes, that's a simple answer. Yes, they need to.
A very simple answer.
Yeah.
All right. If my company's sale is VAT exempt, what hope do we have for the input VAT recovery? Mr. Mohammed, do you want to answer this?
What?
So someone is asking, if my company's sale is VAT exempt,
Mm-hmm.
what hope do we have for the input VAT recovery?
What hope or what?
Hope.
Sorry, Kemi, I'd actually answered that.
Let
question.
Mr. Fabian answer that, please. Let Mr.
Yes.
Fabian answer.
Yes, I've actually answered it earlier.
Okay.
When I said, if your sale is exempt, more likely than not, your supplies, the purchases are also exempt, right? That's the general principle of it, right? And so, but if you then have other, because remember the way the law is couched is that you must relate that supply or that purchase to a service that, to a vatable supply, basically. So if there's no vatable supply, there's really no basis for you to have an input, claim that you can then use to relieve, because the concept is net of that input against the output. So for companies that fall into that category, maybe we need to do a bit more review of what expenses you are talking about. But the initial response would be you most likely need to expense it. It will not qualify for input VAT claim. But again, a detailed diving of what are the expenses that you're talking about may then be required.
Thank you very much, Femi. Okay, Mr. Mohammed, I think this question would be for you. How does invoicing affect the education sectors? Hello, Mr. Mohammed, are you there? Maybe it might be a network issue.
Before he joins, just to provide an answer. Based on our previous discussions with Mr. Mohammed, I don't think there's any sector that is exempted.
That is exempt.
Yeah. What I remember them saying is just categorization. only small companies really will be exempted eventually. There's companies that earn the target now, I think, is 100 million. So if your revenues as a school or as an educational institution, your annual revenues, not profits, your annual revenues are lower or less than 100 million, then this may not apply. But as long as your annual revenues are more than 100 million, you definitely be required to go through the process. What that means is, as you issue your, and I know some schools do that already, they issue invoices to parents, right? Those invoices will have to go through, and when we say go through, not that they will be transmitted, but they need to be reported to the FRS and validated by the FRS before you provide it to the parents. So remember when I presented it, I said this is also even leading to the restructuring and change of operating structure for some businesses, and schools may be one of them. I see somebody asked a question already that do we need an ERP for us to be able to do this? Maybe not, but again, you need to be able to transmit. So if you don't have an ERP, you have to engage with a system integrator or an APP that has the capability to issue that invoice for you. But that invoice has to be issued electronically. You can't use Excel. You can't use you can't use paper. It has to be there in JSON, and I think Kemi, what's the other format? It's JSON and
XML or UBL.
XML. Yes. So those are the formats, and you can't do that with Excel. You can't do that with Word. You can't do that with PDF. So you need some investment, and if you're not, as a company, not prepared to make it, then you need to work with a system integrator or an APP that can then make that investment or has that facility on your behalf. But my response, and except Mr. Mohammed has anything to the contrary, is that educational institutions that earn above 100 million every year need to connect to invoicing.
Thank you very much, Femi. Okay, someone is asking that will there be a disciplinary action on the consumer if the consumer forgets about the VAT at the point of the transaction?
When you say forget, is it that the consumer forgets to pay the VAT, or
So
what
it's
exactly?
not clear here. So whether pay or we add that, but let's look at both scenarios.
Okay, so if I look at a vendor customer relationship, is the vendor that is meant to include VAT on its invoice to the customer.
Correct.
Yeah, so as a vendor, if you don't include VAT as a qualifying vendor, which means you are not a small company, and you are qualified to include VAT on your invoices. If you do not, there's a penalty in the law for failure to issue a proper tax invoice. A proper tax invoice is one that has VAT and has your TIN and all of that. So if you're a qualifying vendor and you issue an invoice without VAT, you issue an invoice that is not a proper tax invoice, there's a penalty. Now, you as the customer, you are supposed to then pay, when you are paying the invoice to the vendor, you are expected to pay the invoice plus the VAT. And so if you do not pay that VAT, there is also a penalty for you for failure to pay the VAT. I think that one is even more. I think cumulatively is about 30 something percent, plus interest plus penalty is close to about 30 to 40% of the VAT that you haven't paid over. So you're expected to pay the VAT either to the FRS or pay it to the vendor, and then the vendor takes that VAT and remits to the FRS. So there's a penalty as a customer if you do not pay over that VAT. And so if you haven't done that, you need to do remediation very quickly.
Thank you for that, Femi. Okay, someone is asking, as an oil and gas downstream company that purchases vatable PPE, how will I claim the input VAT paid on the PPE since the products that I sell majorly is PMS, which is not vatable?
So it goes back to the response that I've given. Once your product is exempt, once your output is exempt, once your sale to the customer is exempt, then you have a problem. You potentially have a problem with input VAT that is claimable. More likely than not, you may not be entitled to it, but we can then look at the nature of the items that you're even talking about and determine, which ones may then qualify. So if I take PMS, for example, if you sell and is exempt, when you buy is also exempt, and that's the major part of your cost. So you can imagine that your main cost, which is the PMS you buy either from Dangote refinery or from somewhere else, is also exempt. There's no VAT at that level. So you'll be asking yourself, what other VAT would then be in the mix? Maybe VAT on trucking, maybe VAT on maybe sales services related to the filling station, for example. Those are items you can then evaluate on a standalone basis and then maybe determine what to do with that. But it's not really going to be a significant cost because your significant cost that gave rise to the sale itself is also exempted. So that principle is what every taxpayer should remember. Start with, what are you selling? Is it vatable or not? If it's not vatable, if it's exempt, then more likely than not, the input VAT claim may not be available, because that has to be the principle. But maybe now that Mr. Mohammed is back, he can talk about the question around the schools, just to reconfirm.
Very sorry, Kemi, I had to step out for just a few minutes.
No problem. No problem.
Yeah.
So someone was actually asking the implication of invoicing, that if it is going to be applicable to the education sector.
Okay, whether the education sector will be required to onboard and all those things.
Yes.
Because they are not. So as long as, let me just answer a simple, the simple question is, once you are registered for tax, whether you are exempt, once you are registered for tax, you are mandated to implement the invoice. I think that's the simple answer to it. So as an educational body or educational institution, if you are currently registered for tax, then you are mandated to implement the invoice. I don't know if that helps.
Yes, I think that's very,
yes,
very
it does. And I think there's a very important principle that you've established, Mr. Mohammed. And it's a fact, and I think a lot of people make that mistake, that invoicing is directly related to VAT.
Yes.
And that's not correct. So invoicing is not directly related to VAT. Invoicing is a national initiative of the government.
Initiative,
yes. The FRS is championing. And what we want to do as a country is have a database of all invoices that are issued between consumers and businesses, B2B, B2C. So it's a national initiative that is not dependent on whether you're an exempt entity or not.
Exactly.
Which is why Mr. Mohammed has said, whether you're in a free zone, you need to, as long as you're a company in the territorial region of Nigeria, you need to transmit, and your revenues are more than 100 million, you need to transmit that invoice. We just want to get the data, not necessarily because of VAT. Exactly. So that principle has to be made.
Yeah, it's beyond tax. It's for national planning. Absolutely. Also. Government needs the data too. Absolutely. So that's why we have an interagency steering committee that is also going to make use of this data. We want to encourage the data once for the government. We don't want several agencies going to different taxpayers to get the same data. So if FRS gets this data, then everyone gets to use it. Just like the initiative behind the tax ID that we're trying to propagate. All right, so we're going to leverage on the NIMC data. Already we're leveraging on the CAC data to, so in the nearest future, nobody will even be asking you to come and register for anything or this thing. Automatically, once you are registered with these two bodies, a thing will be issued to you, right? And you don't even need to provide your tax ID to anyone. With your RC, anybody can call up your tax ID. With your NIN, anybody can, So the same thing, the invoice data we're collecting, different relevant agencies will have to use that portion of that data for their own planning, for their own, expenditure and that. So look at it beyond just tax. And even if you say you're VAT exempt, the government needs that data over a period of time to see how many people are VAT exempt, how many people are not paid, so that they want to amend the laws to probably increase VAT rate or to say, exempt other areas. They will be guided accordingly to say, okay, this area is not doing well, this area is doing well, So the same way with the guys in the informal sector that today we're saying, we're even further giving exemption up to about 50 million or so turnover. That does not mean that they should. We need them on board so that we can even track their turnover and even know whether they should continue to enjoy that exemption or not. And as we're doing that, we're helping them to formalize, we're helping them to grow. It's only if they formalize, they grow, that's when they will be able to now start paying tax, meet up that threshold. And so it's a cycle, right? So let's just see it at that from that high level, and then it solves all our problem. Thank you.
Thank you very much, Mr. Mohammed. Thank you so much, Femi. Okay, so talking about this invoicing being a national initiative, how exactly is the FRS working with the other government agencies to ensure that invoicing rules, whether the ones now or the ones that are yet to come, right, are consistent and do not create any confusion whatsoever for taxpayers?
Yeah, so we had from the beginning of the initiative, we knew we needed to do that. We needed to, because to get these relevant agencies onboarded, and that's why the steering committee was constituted. FIRS, NIDA, Nigerian Data Protection, Nigerian Bureau of Statistics, CBN, even NIPS, because private sector is also there. Nigerian, what do you call the NIPS? Nigerian, I can't remember their full name.
Bank settlement.
NIPS. Even some banks are on the steering committee. Some oil and gas companies are in the steering committee. CAC is on the committee, right? This is to ensure that we harmonize every need for data from any agency so that it can be captured on the invoicing data, because what we're trying to achieve is once we have an IRN number for an invoice, then all the details in that invoice should be there. Today, if you go to a bank to make payment via remitter, all you need is the RRR number. Once a bank calls up the RRR number, the details of the transaction is there. So currently, NIPS is also working on this ISO, is it 200, and I can't remember the exact name, for information message, standardizing information messaging for financial transaction, right? To standardize the messaging that comes with every financial transaction. There's a minimum level of details that should be on that transaction. And the invoicing is part of that. And we have integrated with them, we have harmonized with them so that the IRN number will be added to that information message, right? So that once the IRN comes with that information, then everything. So in fact, maybe when you go in future, when you go to make payment for banks to honor payment, what they need to just ask you is give us the IR number of that transaction, because that is the beginning of that transaction. That's what makes the government to be part of that transaction from the inception. The IRR is tied to that when the invoice is. So once we give the IRR, then that's when the banks can honor the payment. So in that way, I don't see any government agency that needs any data relating to that transaction should just get that IR number. That's whether CBN, whether the banks, whether the Bureau of Statistics, any other person. So you can see how we're trying to tie all these things together. And we're also aware that, you know, some years back, CBN also started an initiative called e-invoicing, I think, for the export area. So we're also talking to them to see all these things, how it can be harmonized together. It's already harmonized with what we're doing, actually, because our own covers everything. But you know, one thing with government, it's in stages. So that's the idea, right? So we ensure that every agency that needs any part of this data or that is currently using any form of this data that we're collecting from this taxpayers on that steering committee, and would also, you know, give us the requirement to ensure that what we're collecting is also sufficient for that agency, so that they will not have to go back to that same taxpayer, you know, to get the same data that we have collected, right? And the whole idea about building a dedicated data center to warehouse this data is a national project, right? So everyone will have connection to it, the relevant agencies of government. And then we have the regulators that are managing this data, they ensure the integrity, data confidentiality, data security of this data, the likes of NIDA and the Nigerian Data Protection Agency are also there to ensure that this data is secured, it's not tampered with, right? The service providers that are playing one role or the other in this ecosystem are also regulated by these agencies, right? We ensure that the transmission of this data is encrypted, nobody gets to see this data and all that. So it's a whole framework, ecosystem. And every day we are looking on how to improve what we're doing by benchmarking against what others have done, right? And also involving more stakeholders that initially we have not thought about them at the initial. So every day we discover more stakeholders and add to the list of stakeholders that we need to engage and also meet up with their requirements. So this is a strategy for the government first, even before FIRS, right? Because what we're doing has the backing of the presidency, is in line with the digitalization and transformation agenda of the government, but being driven by FIRS, similar to the single window project, right? The single window also is a national project, but if you see that FIRS is part of the ones championing it, driving it. So at the end of the day, it's for the nation, not for FIRS. We don't look at it as an FIRS project. We're only driving it. Thank you.
Thank you very much, Mr. Mohammed. Okay, someone is raising an issue saying that we are having a bit of contradicted views with respect to small companies. So they want clarity on the small companies onboarding for invoicing. So are small companies supposed to onboard for invoicing? Mr. You're on mute.
Yeah. Okay.
So let me provide my context before
Okay. Okay,
Mr.
Mr.
Mohammed.
Babia, please.
It doesn't look like there is a contradiction. And the person who asked the question, if you remember at the beginning, when Mr. Mohammed was making his presentation, he did make reference to Kenya, where he said that recently, Kenya has even then extended this invoicing to small taxpayers using other methods, right? When I talked about the onboarding to MBS and saying for taxpayers that are more than 100 million, whether you're an education institution or not, there's a requirement for you to connect the way it's been designed now. Mr. Mohammed will speak to this. Small companies will still be required to connect because that data still needs to be available. Whether the same connection method that is currently being used for large taxpayers will also apply to you is now what I think Mr. Mohammed will then speak to. But my statement wasn't to say small companies will not connect. What I was referring to was if when they asked about the educational institutions, and I say any educational institution currently that does about more than 100 million will have to connect to MBS the way it's been designed, but others, I guess, downstream, definitely you have to connect because again, it's a national invoice initiative. But how you connect, I think, is what Mr. Mohammed will speak to now. Thank you.
All right, thank you, Mr. Babiam. So it's a good question, but we have answered this, I think, in several other engagements before now. So the e-invoicing initiative applies to all taxpayers, irrespective of whether you are large, medium, small. You need to get that straight. It's going to cover, the intention is to get everyone into this initiative. But of course, we couldn't have onboarded everyone at the same time. So that's why we decided to do the first approach. The first approach is simply for ease of implementation, right? Starting from the most sophisticated taxpayers and the ones that we think are somehow ready to an extent. When I say ready, meaning that they have an existing system and more organized, right? That easy to implement with. And that's the idea I was saying, starting with the large taxpayers. So we actually have a roadmap, a 3-year roadmap to cover all taxpayers from large to medium to small. We've not revealed the entire roadmap, but I think maybe based on these questions, I think we will have to do that. I'm already discussing with my superiors and the FIRS. We need to come up with that timetable so that everyone will see the entire picture, right? So that's why we're simply saying, okay, for now, we're starting with large taxpayers. And at some point, we will now also go to the next and then go to the next. But that does not mean that any other one that is outside the large taxpayer category now, within that 5 billion naira threshold, That's not to say that they cannot freely join. What we're simply saying that it's not mandatory for them. They can decide to wait until we come to them. But if they feel they are ready, they can join, come and join. It's not mandatory. So today, if FRS decide to penalize for non-compliance, they will not penalize anyone outside the 5 billion naira threshold bracket, because those are the ones that FRS has made it mandatory and communicated that these ones should comply and have given a date. So that's simply what we're saying. But of course, at certain point, probably early in the year, we will extend to the next category, which is the medium taxpayer bracket. And when we do that, we'll also start the process from the beginning, just like we started with the large taxpayer. There'll have to be engagement for that particular taxpayer group, right? There has to be a pilot phase for them. And then before now, the mandate, because we know that the approach might differ, just like what Mr. Babin was trying to say. If we have used this approach for the large taxpayers, the API integration and all that, it might not work for the medium, depending on what our engagement will reveal, because our engagement with the medium will allow us to also understand currently what they have, their different business models and this, and then we also have our service providers with us before we can now also design how it's going to work for them, how best to work with them. So we have our service providers that also innovate around this solution, the system integrators, right? So we envisage a situation where some of these medium and small taxpayers don't even keep records currently. So how do you tell somebody that probably doesn't even keep record to say, come and push me data or generate invoice? Right? So currently, even in FRS, we're also adding another feature in the MBS, for invoice portal, invoice generation portal for smaller businesses with a minimum number of invoice, because we've seen it how it works in other countries. Maybe companies that do less than 1,000 invoices in a year, because there has to be a markup. It's not for everyone. Can come. So once you have reached that mark, you will no longer be able to use that portal. So these are strategies that will come. The use of mobile devices, the use of POS devices, the use of all those things, right, will come probably in the next phase based on the peculiarities of the nature of businesses within that sector. So that's simply what we're saying. But currently, we equally have medium and small taxpayers that have keyed into this API, right? Because they already have a system like that. And at the same time, the system integrators have also built an invoice system within their own solutions, right? So it's not just to help you integrate. So we have also ensured that every system integrator that is onboarded will be able to also deploy an invoice generation system to help businesses, right? So if I go to a business and say FRS says you should join this, and the business say, no, I don't have any system that I can use, you can say, okay, I have a system that you can use, right? That has already been standardized by FRS. So all you need to know is just I give you license to begin to use it so that you can begin to generate your invoices, right? So things like that will come up in our next phase of engagement. So we're going to start the engagement as early as next year for the next category. And then after that, we will now pilot the different approaches. And then we'll now go to the market similar to the way we did in the large taxpayers. So I believe this has provided enough clarity. But that's not to say that they cannot join. In fact, some of them have joined. I think we also need to start giving those statistics so that people know that actually these people have joined. Thank you very much.
Thank you so much, Mr. Mohammed. Okay, so we are about to come to the end of this session, right? But before we come to the end, I think there's one question for you, Femi. Let's see. Okay, so someone is asking that if the new tax law exempts small companies from charging VAT, what about the VAT charged and remitted in 2025 for small companies with less than 100 million annual turnover?
So I think this is referring to companies, the threshold for small companies currently is 25 million, but from the new law, it will go to 100 million. So
100 million.
I think, I'm not sure, but is this individual asking, because currently, anybody who issues you an invoice, if for example, your annual turnover is 50 million, you are not a small company. And so that means you should have registered and charged VAT on your invoices to your customers. From 1st January 2026, if your revenue for 2025 remains at 50 million, which means from 1st January 2026, will still qualify. You no longer be a medium-sized company, you'll be a small company. And so instead of deregistering and all of that, you need to then notify the FRS that you file again. For you to claim that you're even a small company, there's a requirement in the law for you to file your annual returns. So you need to have filed your returns so FRS verifies that this is your level, and on that basis can then give you can not approve but recognize that you are exempted from charging VAT and collecting VAT from 2026, right? But currently there's that obligation, and you should have been meeting that obligation currently. So Kemi, I don't know. I hope he answers the question for the person who asked.
Yes, I also hope he answers the question for the person who asked it. So thank you so much, Mr. Mohammed. Thank you so much, Femi. So
before you go, that question on HS code for services.
Yes.
So I think it has been brought to my attention that we don't have a HSN code for services. What they use is the ISIC code for services.
Yes.
So they can call that ISIC code and use it.
Okay.
The APIs are there. And if that question has also been answered in the developers community. So people that have issues with that, just go to developers community and type HS code, and for services, you will see the answer, even with the API link to the API documentation. I actually search from there also. So please, I believe that should help. Thank you.
Thank you so much, Mr. Mohammed, for that. Thank you so much, Femi. Now, before we actually end the session, we would like to tell you how KPMG can assist you with your e-invoicing obligations to ensure a seamless end-to-end integration process, and not just e-invoicing, but even your VAT, assurance obligations also. So, Femi, could you assist us with providing just an overview of how we assist our clients and how we assist companies with e-invoicing to ensure that they are able to comply at apt time?
Okay, thank you, Kemi. Let me start with the VAT issue. And there's a particular question that I saw in the chat box that really, piqued my interest, and really emphasizes the need to, for us as taxpayers and the audience here to really seek for support from or get professional advice regarding this improviser. It's going to be a big issue, especially when you end up in a situation where you claim more VAT than you should have claimed. Penalty, again, I said, is 200% of whatever it is that you've claimed. I saw a question around, especially for companies in the oil and gas that do cost plus. If you're a service company and you do cost plus markup, you need to get your consulting firm or your partner, your consulting partner, to take a detailed look at it vis-a-vis the interpretation of that law for your business, because you want to make sure that you are not over-claiming input VAT and you then expose yourself to unnecessary penalties. So as a firm, as KPMG for input VAT, we have rolled out our VAT assurance service. What we do with clients in that scenario is to start from, like I said, help design the controls around your input VAT claim. Start from your master data, your vendor master data. Look at how your vendors are set up, what services do they provide, and help you identify which vendors and which vendor transactions you can now claim input VAT on vis-a-vis the service that you are charging VAT, your output VAT on. So we help you determine that and even do an analysis of what input VAT you can claim based on the quantum of output VAT that you can get and whether you need to take the option of applying for a refund. So all of that is part of our VAT assurance service, and we've rolled that out and are helping clients already to be able to get into the right frame as far as this is concerned. For e-invoicing, also, we play in the entire value chain except as APPs. So you have the system integrator and the access point providers. Those are the two parties that interface between the taxpayers and the FRS. So as KPMG, what we help clients with is do a readiness assessment, help you determine whether you have the right systems, you have the right controls, the right technology, you have the right codes for the transition to e-invoicing. And then we also provide the system integration service. We can help you integrate your system to the FRS, to the APP that then transmits that data to the FRS. So those are the two key areas we help clients with: get ready and help you with the integration. And then at the back end, based on what you've done with your team, if you have another company that is helping you with system integration, we can do the quality assurance of what has been done, the quality assurance testing, to be sure that the data and what it is being
Hello, Femi, are you still there? It seems that Femi's network. Okay, maybe I can just continue from where he stopped. So with respect to system integration, we can also assist with either configure your system directly or you having to connect to our middleware. We are able to also provide other services such as project management as well as quality assurance for your implementation. And I know a number of companies had also asked questions, especially small companies, those that do not have ERPs, how they are able to transmit these invoices. Now, for those type of companies, we are also able to provide managed services where KPMG is able to generate those invoices on your behalf on our systems so that you are compliant and so you are able to meet the overall objective of the FRS.
Sorry,
Are you back, Femi?
Yes, I'm back. I wasn't sure what happened, so I wanted to find out if the meeting was still ongoing.
Okay, so maybe you can continue from there.
No, go on.
Okay.
Finish up.
So I think I'm done. I'm done.
So where did I cut off? Did you hear the full part about the VAT assurance?
Yes.
Okay, all right. So I trust that you'd have spoken about the invoicing support. So it's actually fine. All right. Okay, so thank you, Kemi. Yeah.
All right. So thank you so much, everyone, for joining. For those who are live streaming on LinkedIn, thank you so much for joining this session. We've come to the end of this session. The recording will be provided to all those who are registered. I think we already have your email addresses. And so we're going to share all of this with you. So do have a lovely day and thank you so much. Bye, everyone.
So, sorry, can we just to add, we can respond to questions. If there are questions that haven't been answered, we would add it as part of what we share. Thank you, everyone.
There is a popular African proverb that wisely states, "Until the lions have their own historians, the history of the hunt will always glorify the hunter." And there is no better way to demonstrate this than using the following. These are snips from newspapers and other broadcast media around one of the foremost communications companies in Nigeria. And they tell a negative story. In the next screen, you can see a very positive narrative from the same company. It is noteworthy that these screens are only a month apart, with some of the negative reports in March 2022 and the positive reports in April 2022. What changed in just 1 month? Another intriguing story comes from a widely circulated social media image. It led to various interpretations, turning everyone into a tax expert. People were puzzled by how one entity managed to pay more taxes in 1 year than all the banks in Nigeria combined. The real question is whether this is the true picture. How does it impact the public's perception of these entities? What story is conveyed when such information becomes public? Equally important is understanding who is crafting the story and communicating these narratives. This is why we always say that at the end of the matter is that the story is told right all the time. It underscores the need for taking responsibility in communicating your tax affairs and matters, ensuring that your story is always communicated accurately. Tax impact and transparency reporting provides the avenue through which you take personal responsibility for how your tax affairs are communicated to the public and that your story is told right every time.